Italy's tax system, which is very much similar to other European Union countries in principle. Sorry, I'm leaving behind. So, corporate tax. Companies resident in Italy are taxed IRES, which is the corporate tax for corporate tax purposes, and and they're subject to for the income earned in Italy and abroad. It is a worldwide principle. Companies not resident in Italy for tax purposes are subject to corporate tax only for the income earned in the country. Corporate tax is 27.5%, which is what you would, in some countries, you would call a federal tax. Then we have a regional business tax, which is a local tax levied on the value of production generated in each tax period in Italian regions by subjects engaged in business activities. Non-resident companies are subject to this tax, IRAP, the name, only on the value of production generated by permanent establishments in Italian territory. It is currently applied at a rate of 3.9%, and it can be increased by regions with a surcharge of 0.92. This brings the effective rate on companies to 31.4. Although the tax base might raise this rate up to 40%, depending very much on how much money of the debt component of the capital which is used. Individual income tax, a progressive scale is applied to successive portions of taxable income called IRPEF, which means individual income tax. Personal taxes range from 23 to hi Renee, to 23 from 23 to 43%, and there is then what they call a solidarity surcharge of 3% for the income that is above 300,000 euro, and theoretically it should be applied for the only for the fiscal years 2011, 2012, 2013. Taxpayers, however, will be entitled in the year of payment to a tax deduction for the amount of this solidarity surcharge paid. Anyways, the 43% is applied over 75,000 euro. In addition, a regional surcharge ranging from 0.9% to 1.4%, depending on the regions, is levied on the level of income, and it is passed on to the region of residence, together with municipal surcharge. That means a council surcharge of up to 0.8, depending on the municipalities. Tax system divided in direct, of course, and indirect. As per individual income tax, IRPEF, this tax is levied on income, on the income of the employee, and on the income of self-employed persons. The tax will be payable on income earned in Italy and overseas on a worldwide basis by an individual who meets the test of a permanent resident in Italy, which is an OSCE kind of test. A foreign resident who is employed in Italy pays tax only on income earned in the country. One of two tests must be passed to be considered an Italian, resident, is a life centered in Italy. That means your personal relationships centered in the country, your your sensible relationships centered in the country. It means family, main house, and assets, or being registered in the population registry as having lived in the country for more than 183 days per year. It is important to point out as regards taxable income from outside Italy that a tax credit is granted for tax levied outside the country. Of course, on a same tax basis. So, the individual income tax, non-residents are subject to tax on income produced in the state. As we said, the law expressly identifies cases in which the income owned by non-residents is considered to be produced in the state territory. Any contrary provision contained in the agreements arranged by Italy with third countries to avoid double taxation prevail over the internal regulations. In some cases, international agreements to avoid double taxation limit the rates of taxes payable by non-residents for the income considered to be produced in Italy. Typically, the example could be the treatment of royalties. Value-added tax. In most cases, VAT is 21%, which is a basic rate. There are reduced rates of VAT of 4% and 10% on basic products, i.e. books would be 4%, and food and hotels could range around 10% in those cases. VAT is charged on assets and services in Italy as well as on imports into Italy. VAT returns are made monthly. In certain cases, it is possible to make a return once a quarter. That is when revenues are below threshold. An annual VAT return must be filed by the end of February or by July. By February, if you are entitled to a tax credit, this would allow an advanced reimbursement of the credit. As extraordinary economic measures starting from next July 2003, if they don't manage to avoid it somehow, the tax rate will be set at 22% of the VAT basic rate. As a member of the European Union, Italy carries out business operations with other EU members without applying VAT on purchases and selling of both goods and services.